Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap. It is Wednesday. Fed minutes came by. You had the oil inventories and PS. A big day, on Wall Street. A lot of people are like, how did this happen? Where'd the strength come from? You have terrorist attacks going on in Europe. There's bombs being put in certain places and scares, and Fed might lift off, and why are we up 244 points? Well, you're better off looking at the charts, and you're better off putting together a plan than asking so many questions on why the market's doing what it's doing. Because if you look at the charts of the S&P or the SPX, you will see that it's been pretty methodical, guys. Here's your August low. Here's your red dog reversal, double bottom. Here's when we took out this resistance and basically held above it. Big push. Here we held, and then you had the 8-day moving average, which was broken right there for the accelerated trend. So really from the lows to the highs, this was your first controlled pullback, pulled back basically to this point of reference right here. And then in the light of what happened in Paris, the market did not go down, gave you a red dog reversal right around that 222 pivot. At this point, you also had the oscillator minus 50, so good spot if you got short here to switch some gears. And PS, big day Monday, a little bit of digestion on Tuesday, never even tested yesterday's lows, and then took out yesterday's highs. So the question is, what's next? At this point, some might say it's a clear path back to highs of that recent move. At this point, nobody truly knows, except for there's lots of things to do across the board. So what you typically want to do is you want to look at different sectors, what sectors are playing catch up, what's leading. You look at the Qs real quick. The Qs that quickly filled this gap right here. Okay, if the market was going to be any weak, the sellers would not have let this happen, where all of a sudden you have this big day Monday, it gets rejected right into resistance, and then boom. That tells you that there is strength and there is buying out there. Now technology is back above the 8 and 12-day, the 8 and 21-day moving average. So that is showing you strength. So this will probably be the first group to make new highs. Within there, let's go over some charts real quickly. Microsoft, I know Sperling's been all over this thing. He's been sitting in it, which hasn't been the easiest thing to do. And all in all, big gap up, going sideways. They weren't able to come in and fill this gap. It turned up today. You would think at some point Microsoft makes new highs on the year. All right, we talked about Google and Amazon, being high beta leaders. Both held the 21-day. So markets came in further. Leaders held the 21-day, and then look at Amazon. Amazon held the 21-day, which here was your dip to buy if you did so. Okay, right there on the 21-day, or when it gave you this red dog reversal. What's a red dog reversal? When it trades below the prior low of 640, comes back above it, and then had a big day. So now we'll see, if this could be, one of the first candidates also to make new highs on year. Google, let's see if it's a coincidence that a strong stock. Oh, look at that, another strong stock that held the 21-day. So if you do sell when it breaks the 8-day, you have the opportunity lower to test the 21-day. And now this also is in the game, perhaps for higher prices. 2 days ago we talked about Netflix, that engulfing day that probably put it on the map to take out 115 on its way back to highs. And look at this, a lot of guys in the VTF were all over it. Why were they all over it? Because you had a powerful reversal day on Monday that took back all the moving averages, showing you strength, and then it took out this descending channel, and another nice day to the upside. So this too, leadership role, could get back towards 127. And then you think about Apple. Apple was a drag. Then today, all of a sudden, I guess maybe they told people on Monday what was going to happen, because remember that reversal on Apple, putting it back in the game? Well, Goldman Sachs came out today and said Apple could be 160 and change within 12 months. So that gave some confidence back to the stock. That the last analyst said that orders were down 10%. Goldman likes it. So, it gapped up, had a push, and held there all day. So now Apple looks as if it's back in the game. Okay, you have a gap right here. Okay, to trade against. So if you're long, I'm long this. I'm also long Microsoft. You could be long versus the gap. The gap is 115.50. And I do think at some point, now that it reclaimed the moving averages, it fills this one. You go to a 5-minute chart of Apple, and you can see, a little bit of let's go to a 15-minute, I'm sorry, an inverted head and shoulders pattern where, what is an inverse head and shoulders pattern? An inverse head and shoulders pattern is this, where you have the left shoulder, the head, the right shoulder, here's your neckline from maybe 112 to 117. That's $5. You flip that over, that gets you, well through this gap. So anyway, here's your gap right in front. Don't know if it goes in there tomorrow, but we'll be looking for that gap to get filled, especially considering now this is almost like an island bottom, right? Gap down, all these people trapped, gap up, so they made you go after it fast. So we'll see what happens there. But with Apple back in the game, it kind of helps with sentiment. And right now, we'll see if if this continues. Maybe it has an inside day and then goes, we shall see. Then in sector land, you had the Russell, played a little catch up. This too, if you're in it from the red dog reversal here, yesterday you had a bit of a pause and then, it resumed. We'll see what happens into these moving averages. Maybe it fills this gap tomorrow. The bios were strong all day, the IBBs. This actually, I do think, broke its descending channel here. That is positive. Look at that. A descending trend. That means if you shorted it here or there, you made money, but this time it poked its head through. So a little change of character. If you're in it still from this little swing spot, good for you. And now it seems as if this is your next area that it could contend with. The banks showed some cajones today. Goldman, woke up a little bit. When you have a little bit of a hawkish Fed or rates could go higher, the banks usually act a little better than this. This is okay. Some are still long versus this little pivot. You could see higher prices. I think JP Morgan did act a bit better. JP Morgan, cleared this spot, and this probably will be one of the first banks to retest the prior highs, if any of them do. One thing we were looking at today was oil. What would the market do if oil broke 40? Well, oil broke 40 and the market didn't care, and then it bounced back. All in all, the USO still hanging around. Market seemed not to care today about it, but we'll see what happens if it continues to care or not care if it breaks below that. The XLE was a little wishy-washy all day, but still hanging around. We talked about the engulfing day right here after a big-time double bottom right there, and then it held higher, showing some commitment to this situation, and now we'll see if it can work its way back into the upper end of this channel, which would be good for the broader indices. So overall, by measuring the movement and by using technicals and following charts and watching the action versus the headlines and what everyone's saying out there was lots to do, especially this week starting on Monday when the market couldn't go lower based on the geopolitical narratives out there. So with that said, I think the market is kind of comfortable with a rate increase in December. Get it out of the way and a very gradual, did I say gradual? I said gradual approach. And perhaps we get back up towards 2100 and then maybe even a bit higher. But what you got to do is rotate between sectors. All stocks are not created equal. Know where the pivots are so you're not in something too early. You don't stay too late and you continue to move around. So I'll see you tomorrow at the morning call. Have a great night. Scott Redler, T3 Live, who am I? The Chief Strategic Officer. I was up late last night with a webinar, so hopefully you attended and learned something. I'll see you in the morning. Bye-bye.